Will this move sustain, or are we entering a bear trap? Let's take a look at the charts and see what it's saying. Okay, welcome back to the channel, MegaWhale team. Thanks for tuning into today's video. Wow, guys, wow, Bitcoin has moved up a lot. And first and foremost, I just want to say thank you to everyone who watched yesterday's video, who liked it, who commented. It really helped. It pushed the video out there and I really appreciate it. I appreciate all your support, whether you're a commenter, whether you like the video, whether you just watch the video and don't do anything. I appreciate all the support and thank you guys. It means a lot. Now, before we get into it, and obviously the topic of today's video is, are we in a bull trap? Is this move a bull trap? Or are we going to continue upwards and, go to new levels? And we talked about those levels yesterday. We're going to kind of focus on that today. The question is, are we in a bull trap? Yes or no? That is what we're going to try and answer. Now, before you get into it, guys, head down, click the subscribe button, click the like button, click the comment button, leave a comment. Obviously, if you're interested in joining our Telegram channel, link in the description, you can get access to all of our updates, analysis, information, so much more. All of our charts are there. And if you're interested in joining the VIP trading channel, we actually have a 30% off discount right now, which you can take advantage of for 48 hours. Head down to the free channel, click the link, and you'll find the information in there. Let's go ahead and get into it. So we'll start off with our data. As you can see, Bitcoin monthly return is now at 6.85%. It was at 3% yesterday, up a little bit more since then. Our volatility has actually bumped up around 0.1. Obviously, if there's a recent surge in price, it is expected that volatility will actually follow with that. And as we've been saying yesterday, we do expect a big move. Volatility is at an all-time low, basically lowest point it's been in 7 years. The price action has steadily consolidated sideways. It's like a pressure cooker, guys. It's pressuring up, the pressure is becoming too much and it just pops. It's like a balloon, you blow it up too much, it pops, okay? Can only consolidate so long, and the bigger and the longer the consolidation is, with that volume and volatility decreasing, eventually it does pop in a direction. So we've seen kind of a start of that already. We saw that explosive rally upwards. It's a 10% move in most coins there. Bitcoin did a significant amount upwards, and it was quite rapid too. But again, was it fake? Was it artificial, or is it natural? We're going to kind of talk about that today. But I want to talk about this. And wow, what a bloody 24 hours. We're looking at $750 million in liquidations. I saw this as high as 4.1 billion, sorry, in liquidations not too long ago. 82% liquidations are shorts there, guys. Look at all the shorts absolutely destroyed here in liquidations. Shorts really did get wrecked. And what that tells us is the majority of people are wrong always. And I've been saying it for so long. The majority of people are wrong and the biased are late. It is a very common phrase. The majority are wrong and biased are late. And the majority were expecting this not to be the bottom. They were expecting us to drop down to 12,000, 13,000. That was definitely possible. But then you had those unrealistic targets of like $3,000 and even potentially lower. Just made no sense. And like I said at the top, if you remember at the top, if you've been on the channel, been watching, I said, the closer we get to the top, the more wild and more extreme these top predictions become. We started seeing 300,000. We started seeing $400,000 predictions for 2022, guys. Okay? Just as we reached the bottom, which was in June on 18,000. We told you guys on this day, the bottom is in. The 17th, 18th. We told you the bottom was in 18K. But as we reach that level, throughout this range, we've seen more extreme and more extreme bottom predictions. It started off being 10,000, then it was 7,000, now it's 3,000, and now it's even lower. So you have to be aware, as we get to tops and bottoms, predictions become more extreme because people hold cognitive biases, self-serving biases, and they want the price to move in directions that fulfill their bias and benefit them. But in reality, guys, the price doesn't care what you think. It doesn't care what you want, it will do what it wants. It's up to you to realize that and then act accordingly to make profit in this market. But anyway, guys, I'm kind of digressing a little bit. Let's take a look at what really happened. And this is a really nice chart over here, our zone chart. As you can see, we broke through 19,800. And remember, if you watched the channel video yesterday, you would know that 19,800 was the trigger for a move upwards into this range, okay? As we've seen before, 19,000 was a trigger, 19,800 was a trigger for a move upwards into this range. 20,500 was that major weekly resistance. Now, here is the thing, guys. Bitcoin has broken over 20,500 Does that mean we're in an uptrend? Does that mean we're going bullish? What does that mean? Well, here's the thing, and as I said already, it doesn't really matter what happens before the 2nd of November. It doesn't matter if we go up, it doesn't matter if we go down. The 2nd of November is going to shift perceived and actual systematic risk in the market, which will therefore influence the direction of price from no matter which point it is sitting at the time of the news release. It doesn't matter if Bitcoin's here. It doesn't matter if Bitcoin's here. The systematic risk shift based on the news we'll get from FOMC will alter the price action. Now, the higher we climb before FOMC, the higher chance the price will initially react poorly to whatever news is released and will crash. Okay, and vice versa. Now, we'll talk a little bit more about that later in the video, but let's take a look at one thing over here. We are actually coming up on a pretty major resistance, and that is 20,800. 20,800 is a bigger resistance, not so much on the Bitcoin chart, but Bitcoin is more or less front running a lot of things. But if we go ahead and take a look at the total cryptocurrency market cap, this is where it gets interesting. We can see a very strong resistance zone right over here. Now, the total cryptocurrency market cap is essentially all of the money in cryptocurrency as a collective expressed on this chart. Altcoins, Bitcoin alike, it contains everything. So we can see how the market as a whole, how the cryptocurrency as a market as a whole is performing, not just Bitcoin, not just an altcoin, we can see it all. And we want to see bullish strength on the total cryptocurrency market cap when we're taking a look at overall cryptocurrency trends. We're looking at overall the market as a whole, the trend of the market as a whole. Because obviously if the market is in an uptrend, doesn't matter about those short intraday fluctuations, the price of these assets should theoretically rise. So we're looking at the total cryptocurrency market cap. And what we're seeing here is that the total cryptocurrency market cap hit a major resistance at $965 billion. Okay, now we have to assume this will hold as a resistance until proven otherwise, and we will see a rejection. If we take a look at some other coins such as Bitcoin and Ethereum, we will see similar resistances popping up, like we just showed you. This 20,800 level is a very similar resistance. It is a resistance at a weekly level right over here, indicating potential rejection point for Bitcoin in the short term. But again, it's not really answering the question in today's video, so let's go ahead and answer it. Why could this be a bull trap? Let's get into it. So like we said already, guys, FOMC is very much an important one this month. They usually are quite important, but particularly this month, it is very important. And the reason being, and we've talked about it already, is because the Wall Street Journal released an article a few days ago, about 6 or 7 days ago now, stating that the Federal Reserve will hike by 0.75 basis points. And after that, they will pivot. Okay, so the market went from pretty bearish. It went from a downtrend, which was a short-term downtrend breaking down of supports, into a situation where the perceived systematic risk all of a sudden shifted to the upside. Okay, now I think I have a chart to explain this, and forgive me if I can't find it, but I'm going to take a quick moment to see if I can find it. And the reason this is significant is because, oh no, we do have it. It's over here somewhere. Okay, there it is. Okay, this is our perceived systematic risk chart. Here it is. So I'll explain. So I've been saying for months, guys, the market does not need to actually see a pivot to then reverse. It just needs to know a pivot is coming, and all of a sudden the perceived systematic risk will shift favorably, the risk return ratio will shift positive, and the price of assets will rise. And that is exactly what we have seen in the last 2 or 3 days. That concept explains this entire uptrend. The Wall Street Journal leaked information saying that the Fed will pivot. That told investors that the systematic risk in the market is about to shift. People naturally want to front run these massive shifts in the market to try get in early. The problem with that is this information was not verified or validated by the Federal Reserve. They have not actually announced an official pivot, nor do we know if they're going to. So the market front ran this news. The systematic risk decreased in the market and the prices of assets rose to this astronomical level compared to where it was a few days ago. Okay, now this is where it becomes an issue, because yes, we've got a few days until the Federal Reserve meeting, but if they do not mention pivot, if they do not mention potential drop in interest rates, the market will correct. You have to be very careful here. The market will correct, okay? Let's take a look at this chart. So why does the price move on perceived systematic risk so much? Well, if you take a look at this chart over here, and we have, I'm just going to quickly explain it. We have cryptocurrency represented by C and stocks represented by S. As you can see, they're the same financial market, or in the same they're bound by the same principles, and they're bound by the same triggers, which is basically the US dollar. Okay, the US dollar is the determining factor of how these asset prices move in general. Okay, they are correlated to each other, but they're not linked to each other. A lot of people say, oh, the stock market's gone up, therefore cryptocurrency is going to go up. It doesn't really work like that. They both move up as the US dollar shifts in strength. Okay, they both do move down at the same time too. There's about a 0.7 degree of correlation between the two, as you can see by the correlation coefficient down over here. Okay, so really quickly, we're going to take a look at this. This line here, this uptrending black line here, represents the risk-free rate, okay, for the market. So as we adjust systematic risk, which is this line over here, moving this systematic risk down or up, we adjust the overall risk-return relationship between, obviously, the return on the investment, all right, and the risk-free rate for the investment, okay? So as systematic risk increases, our beta for these assets increase. They shift this way. Therefore, the risk for equal returns increase for these investments. Therefore, people are less likely to hold, they're more likely to sell, okay? Now, what is systematic risk? Systematic risk is interest rates, it's monetary policies, it's taxation policies, okay? It is potential future rate hikes, it's inflation, it's all of these components of the economy that influence the price of assets that we cannot control. So in this scenario, what happened is we did not get actual systematic risk. Now, actual systematic risk is the real data we get, okay? Perceived systematic risk is the psychological perception of what influence the potential data that is not released yet is going to have on the market, okay? The perceived systematic risk dropped. It went this way. The beta increased. All of a sudden, the risk relationship became positive, and therefore these assets prices jumped. That is exactly 100% exactly what explained the logic behind this move, okay? Now, there were a lot of shorts in the market, as we saw by the liquidations, which squeezed the shorts, of course, and pushed the price over and into these large liquidity zones, which is obviously faced around over here. This is a large liquidity zone. Now, if we flip the chart, we can see very similar things to either side over here. We see liquidity zones all the time. We see these liquidity grabs within these regions. This whole region here is a liquidity zone, just as this whole region here is a liquidity zone. We are in a liquidity zone right now. The question is, will we sustain above it, creating new support, or will we drop down? Very hard to say right now. We have to wait into FOMC. And the only thing you should be deciding right now is, what do I do if I didn't enter prior to this move, okay? And what should I do if I have entered prior to this move? So we'll answer those two questions. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. What should you do now if you did not enter, whether it be a spot position, okay, in this entire consolidation phase we've had on Bitcoin for the last couple months, you know, where you didn't enter in this phase down over here or over here? What should you do if you did not enter yet? So the answer to that is very simple. Wait until the 2nd of November. Wait until we see exactly how the data will shift the economy and shift the way asset prices move for the foreseeable future of a couple months or days or weeks or whatever. Okay, but so news that does come out will shift the risk return balance on these assets and therefore influence the price. The last thing you want to do is jump in now and FOMO in now, and then we get bad news on FOMC and the prices crash. Okay, so you have to be cautious, guys. Now is not the time to be buying. The time to be buying has already happened. Now is the time to wait, see what happens, see if this entire trend upwards can find some base of support up this level, okay? Because we pushed upwards, but we haven't found or retested any support. We need to come down, retest the support, find support, see if we can actually hold support before we go on the next leg upwards. So that's the end of that one. Question number 2. If you did accumulate down at the bottom, if you have 18K, if you bought longs over here, this will be the time to be scaling out of your short-term swings. So if you bought longs for a purpose of a pump, if you bought positions for a purpose of profits on the way up, congratulations, you did great, you made good money. Obviously we made a lot in VIP. Now is a time to be looking to close out some of those, not the entire positions, because yes, there's always a chance we continue upwards, but take some initial profits here while Bitcoin has found resistance. As for your long-term spot bags, there is absolutely no reason to sell those whatsoever. You can absolutely hang on to those for right now. I would be actually saying, even hang on to those if we crash back down to break even. Because right now, all of the data does suggest 18K is the bottom, 18K was the bottom, and it will continue to be a bottom until it's proven not, okay? So those are my answers to those 2 questions. Let's take a look at some of the rest of the stuff in the economy. DXY, we'll go back to this on the smaller time frame. Let's go to a daily, and then we'll go down to an even smaller time frame. So let me scroll back over here. So as you can see, guys, a lot going on in the DXY. We do have some sort of expanding rising wedge formation, which obviously is a bearish pattern. We identified that at the top over here, saying we're more likely to come down to see 110. We saw 110, we pumped up, rejected 113, come back down to sub 110, and now we are finding some potential. And I say potential very loosely, because it's very hard to say what happens with the DXY. It doesn't traditionally move in structures very well. As you've seen in the last few days, you know, we've gone through a bear flag, a symmetrical triangle, and now we're in this larger flag. So it does move through structures quite quickly. But we are finding some potential support here. And this is actually not a random zone of support. This is quite an interesting level of support, as we did find a lot of support in this range prior to this in early to mid-September. So this will be the potential bounce point for the DXY. And if we do crashing and lower, we do have this support line over here, which is coming up. So it can indicate maybe Bitcoin gets one more pump upwards, short-term grab, and then drops. Potential, okay? Remember, the DXY and Bitcoin's prices are negatively correlated. DXY up, Bitcoin down. Okay, so when we see DXY at support, base of support after a big drop, we have to assume, okay, if this continues upwards, we should be looking for points of weakness or rejections on Bitcoin to see if we can see any short-term trends flips. Okay, very interesting to keep in mind there. USD AUD, same thing. Okay, bull flag, found support. Same thing. Let's take a look at some of this stuff. So Dow Jones, pretty much in the same spot here with Bitcoin, you know, it's pushed up a fair bit, it's found some weekly resistance here at this point right over here. Pretty much that same point as Bitcoin. If you go back to the Bitcoin chart and you take a look at kind of where we're sitting, we have a similar pattern. And I know I've got a lot of stuff going on the chart over here, so I might just quickly delete some of this. There we go. You can see a similar pattern. We have this rounded bottom formation, this clear scan pump, and then this weekly resistance. Let's go back to the Dow Jones. We have the same thing. We have this scan pump, we have this weekly resistance, and this rounded bottom formation, which we're currently retesting. So a very similar pattern here that we're seeing across the financial markets, not just Bitcoin. S&P 500. And this is one of the ones that, you know, have kind of gone against that pattern, but we're seeing similar things here too. You know, we broke out of its resistance. It is looking more bullish and bearish right now. Obviously breaking through its resistance zone, but a lot can happen if the Fed changes those interest rates. Bond yields have seemed to find some base support. Obviously, the bond yields will increase when the DXY increases, so that is not anything too abnormal. And of course, if we take a look at the 2-year bond yields, we should be seeing very similar things on the smaller time frame. As you can see, some degree of support has been found over here at around 4.418 on the bond yields. Again, losing or dropping below this level here on the bond yields would be the catalyst, I would say, for a continuation upwards. We would really like to see, 4.34 lost for the bond yields. And I think I might go ahead and leave it there, guys. If you enjoyed the video, remember to like, comment, subscribe, and we'll catch you in tomorrow's video, guys. And actually, I might just say one more thing. We do have a giveaway coming up. That's right, I forgot the word for a second. We do have a giveaway coming up. The giveaway will be announced pretty shortly, I think next week. Now, I'll be away for a few days, so it might not be a video tomorrow or the day after for a few days. But there'll be a video when I get back next week talking about the giveaway, and it's going to be a 4,000 subscriber giveaway, guys. We're so close to 4,000 subs. Might give away a couple $1,000s, so we'll give you guys information on how you can enter our giveaway. We've done heaps of giveaways in the past for heaps of winners, but this will probably be one of our bigger ones. We'll give you information on how you can actually enter in our next video. That being said, guys, we'll see you next time. Cheers.